Welcome, everybody. Yeah, remember in Animal House? Remember Kevin Bacon bending over there? Assume the position. Whack. Thank you, sir. May I have another? Whack. Thank you, sir. May I have another? Yeah, that's pretty much the Biden budget. Okay. Today, I'm in my car. I had some appointments this morning. I'm listening to the news, and I listened to this Biden lackey talking about the wealth tax. He's like, well, we kind of have a wealth tax already here in this country. There's precedent for it. People pay a tax on property. We have property taxes. Every year you get reassessed on your property value and the taxes change. This is obviously a schmucko that's never owned a house in his entire life. Oh, yeah. The tax appraisers are coming out every single year. And yeah, if there's a bump up in the market, they're jumping all over that. Give me a freaking break, man. These are the people they roll out. Kids that have never done anything. Oh, they might check a box or two. Their parents may have donated to the right politician, so they get a job in the White House. They're adjunct morons, is what they are. Anyway, let's go through this Biden budget blowout, some of the taxes here. Again, my buttocks is going to hurt after this one. Wealth tax, like I just said, brought the wealth tax back, 25% minimum tax on the full income. Again, like Inigo Montoya says, I don't think that word means what you think it means. Okay, it's not income. The full income of Americans with more than 100 million in wealth. So you gotta take the value of their assets. Okay, let's say you're a bigwig, and in 2021 your portfolio was worth 150 million. 150 million. Now, guess what? You can't use it. You can borrow against it. And I've said this before. That might be something you want to broach when people borrow against assets for personal use rather than reinvestment. But anyway, let's say in 2022, that was your portfolio drops. It's worth 50. I mean, we just watched today, Silicon Valley Bank. That stock was up at $700 a share. It's going to zero. How does that work? Do you get the money back because the value dropped? Or you're just, we pay just shit out of luck? Again, I don't even understand how this thing is the slightest bit constitutional in any way, shape, matter, or form. They want to raise taxes on personal income and capital gains. Yep. Wants to tax capital gains as the same rate as ordinary wage income for those making more than $1 million. That would effectively double the 20% tax rate on capital gains. He also wants to raise the top rate on personal income over $400,000 to 39.6% from 37%. But wait. There's more. The budget extends a 3.8% surtax currently applied on investment income of couples making more than $250,000 a year to business income. It also raises this rate and the top Medicare payroll tax on wages to 5% for those earning more than $400,000. This 44.6 top marginal rate would hit business, investment, and wage income. Now, again, let me explain this to you. When you're allocating assets, there's something that's called risk and reward. And the taxation of whatever you might make is a factor. You might say to yourself, that I can make that investment. Okay, I can project it to make this amount. But Uncle Sam is going to take 50% of that. It's not worth it. So there, you could have been a business, could have been a restaurant, where the guy says, we could have created jobs, put food on people's tables. But the individual says, it's not worth it. It's not worth the risk, because even if I do well, they're going to take 50% of what I put at risk. Again, proposals like these come from people that have never done anything. Let's be honest. They've never built anything. They've never created anything. They've never had to make a payroll. Oh, I know they're members of Congress. They've got their staffers. They don't pay their salaries. We do. They have no fundamental understanding how the world works. Well, they think everything runs through them. And if this, again, you take a look at these numbers, do you know what this is going to do to small business owners? To investment? Yeah, we saw this happen to a great degree during the Obama administration. He was pulling the same crap. And people are like, screw this. Screw this. Between the regulations and the higher taxes, forget it. I'm not getting involved. I've described this before. When you're a business owner, you have various different obstacles that you have to deal with when it comes to the government. I call them mines. You got a minefield. And, you find out where the mines are, okay, and you try to avoid them. You try to work around them. But whoa, here comes the federal government that decides to start moving these mines around or adding mines and making it more difficult. At some point, you're like, all right, I'm out. You add state taxes, and many high earners out there were going to be paying a combined rate of more than 55%, which is higher than the UK, higher than Germany, higher than Spain, higher than Sweden. Yay! Well, we're finally number one at something here in America. We're number one. Biden could start passing around those foam fingers. We're number one. We're number one when it comes to taxes. We're banging our citizens out. Corporate rate increases. Again, a corporate tax, and again, this is to all of you left-wing fools out there that don't know your ass from a hole in the ground. You do realize that corporations don't pay taxes. What do you mean? Corporations, they're not paying a fair share. Put the skull bong down. Put TikTok down and learn something. Corporation is a tax ID number and a logo. Corporations derive their income from you. Yeah, you. Yeah, you anti-capitalists that love capitalist companies like Apple. So you go into Apple, you buy yourself an iPhone. You want the latest thing, right? The one with all the woke emojis, whatever the hell they're putting out. Anyway, neither here nor there. A portion of that money that Apple took in from selling you that phone, and I'm not talking about the sales tax. Sales tax is on top of that. That goes to pay Apple's corporate tax. Okay, corporations don't have a tree in their backyard that they go and they pick the money off the tree to pay the corporate tax. Higher corporate taxes just raise prices for you. You're following along here? Okay? Testadura. Is it getting through? Starting to sink through your head? Yeah, I didn't think so. But anyway, yeah. Corporate income tax rate to 28% from 21%. The minimum rate on foreign earnings of U.S. multinationals to 21% from 10.5%. Nuts. That's going to raise the cost of investing, federal corporate tax. And hey, we got this big deal with all these countries around the globe. We're going to have a minimum corporate tax. Bullshit. That was never passed. These countries are smart. They're just waiting for us to do stupid shit. They're not going to raise the tax if they can attract businesses. For crying out loud. Ireland and Dublin, you think of built on Guinness. No, over the past couple decades, it's built on American companies involved in tax inversions and moving their headquarters over there. Who are we trying to kid? Oh, we got the 4% stock buyback tax. Again, getting involved in something that, quite frankly, he doesn't understand. We talked about corporate tax buybacks here on the podcast. There's good ones and there are bad ones. And like I said, if a corporation is buying back their stock, not because they're buying back the stock awards from the CEOs, I don't have any problem with it. Some other crap as well. Hundreds of billions more dollars repeal the deduction for foreign-derived intangible income, restrict deductions of excessive interest to members of financial reporting groups, modify tax rule for dual-capacity taxpayers, and strengthen limitation on losses for non-corporate taxpayers. I don't know what the hell any of that means. To be honest with you, that's why I've got, an accounting department and the best in the business. But it doesn't sound good. Doesn't sound like a good word salad, if you ask me. Okay. These tax increases are projected to raise revenue as a share of GDP to a level of 20.1% in 2033, which is above the 50-year average of 17.4%. Spending is going to increase to 25.2%. Did you notice that as well? I know I was talking more about the taxes, but they keep talking about, we're going to reduce the deficit by $3 trillion. Again, like Bernie Sanders doesn't understand the difference between equity and equitable. They are, all these members of the left, they always talk about deficits. Okay. You have we have a yearly deficit. It's not debt. They're not reducing debt. The entire time we're spending a shit ton more money than we're taking in. Guess what? Guess where the debt is projected to be in 2050? Over $50 trillion. I got to do my Dr. Evil with that. $50 trillion. Anyway, this is going to be a topic of conversation over the next several months. God bless. WatchDogOnWallStreet.com is our site. Again, become part of the Watchdog on Wall Street family. WatchDogOnWallStreet.com.